Welcome to American Dreams, Keys to Success, with your host, Alan Olsen.
We're here today with Steve Merrell. He's the principal and co-founder of Monterey Private Wealth. Welcome to today's show, Steve.
Thank you. It's great to be here.
So, Steve, why don't you give me some of your background? First of all, private wealth, Monterey Private Wealth, you're money managers or what?
We are a financial planning firm. We do advanced financial planning, and part of that process is we help people manage their money.
Okay. And so give me some background how you got into management of financial planning and funds.
So I started out my career when I first got out of business school. I had an MBA, and I wanted to be in the financial markets. I started as a bond trader and did bonds, government bonds, treasury bonds for First Interstate Capital Markets in L.A. I moved from there into the derivatives market, and from there I went to American Express to help them hedge their interest rate risk. But what I really wanted to do was to manage money for people. And so I soon was given the opportunity to manage some of the mutual funds that American Express had. Had about $10 billion in mutual funds and pension fund assets that I was managing. And after doing that for about 12 years, I took the opportunity to come out to California. I did a gig as a CFO for a bike company, Specialized Bikes, and then I decided what I really wanted to do was have my own firm. And looking at the marketplace, this was in 2001. Many people had been hit hard by the dot-com crisis, and I thought, wow, what a great opportunity to bring professional money management skill to meet the needs of individuals and families.
That was great timing.
Yeah,
right after 9/11.
It was a great market. Yeah.
So you're stepping in and saying, I want to do my own business. How do you start a financial planning?
I thought it was going to be a lot easier than it really was. The first thing I did was I started looking around, looking at the way different firms were organized, the kind of business models that were out there. And I decided pretty quickly that the firm I wanted to have would have nothing to do with sales. I did not want to feel like I was selling anybody on product or anything like that. Instead, I wanted to be purely consultative. So I settled on a fee-only structure. So in our firm, we don't charge any commissions. We don't get paid any fees or anything from any third parties. Strictly a client-advisor relationship where we sit down with them and understand their needs, and we build them for the time we spend, just like any other professional would build them.
And when someone comes to you, typically what's their investable asset?
Typically, our minimum is $1 million in investable assets. We do make exceptions from time to time, but we hold that pretty firm. But it's not just the amount of assets that a person or a family has. We're also interested, is there some complexity to their situation that we can help them with? Is there something we can do that will add value to the relationship? And that's pretty important to us.
So as a private wealth, Monterey Private Wealth, you how many offices now, two? Or?
We have 2 offices. We have one in Monterey, and we also have an office in Pleasanton.
Okay. And employees?
We have 8 employees, including the 3 principals.
So when you start with an individual client wanting to come to you, typically they call you on the phone and say, hey, let's get set up. So what's the approach?
Our typical client comes to us as a referral, either from an existing client or from a CPA or an attorney. They have somebody who they're intimately familiar with, who they trust, who refers them. Because when we're talking with people here with significant assets, and they're pretty wary. They've had a lot of people come after them to try to get their money, try to get their business, and so usually they'll come as a referral. But our first order of business really is to set down a very well structured financial plan. Most people, even people with significant means, often don't have financial plans, and we find that by creating a financial plan, we help them organize their lives, we help them understand how their goals fit together and how their resources can most effectively be rallied to meet those needs, and then we can go from there to help develop portfolio structures and other things that they're looking to do.
Are there any tricks of the trades to market volatility, or?
Well, part of the real trick of the trade and market volatility is to not get too uptight about it. And that's very difficult. Most people get in trouble with investments because they let their emotions get all tied up in knots. And it's very easy to do. In fact, one of the greatest benefits that we bring to our clients is a very rigorous, disciplined process that takes the emotions out of the equation as much as possible and replaces it instead with a very clear strategy, very clear objectives, and very clear way to measure our progress toward those objectives. And by doing that, we can help them keep the volatility in perspective.
But how do you stay calm when the market's falling 250 points? Keeping in line with where you need to be. How do you keep the perspective?
I like to when I talk to clients about this, it's a question that comes up all the time, as you can imagine. I like to say, building a solid portfolio is like building a good house. We build a good house. We use sound engineering. We use a great architect who understands our needs and understands how we're going to use the house. We build it with high quality products and materials, and we follow the best construction methods. And we know that house is going to provide shelter and protection when the storms roll in. It won't prevent the storms, but it will provide protection from them. And it's just the same thing as a portfolio. We use very high quality investments. We use very soundly engineered portfolio structure. We use the best management techniques, and we know that portfolio will provide protection to the client when the storms come in. We know there are going to be financial storms. There always have been. There always will be. But when we follow that kind of process, we can have confidence that the portfolio is going to stand up.
I'm visiting here today with Steve Merrell. He's the co-founder of Monterey Private Wealth Managers and offices in Pleasanton and Monterey. We'll be right back after these messages.
Protecting your family's health and welfare is a sacred trust. At Greenstein Rogoff Olson Company, we know that sound financial planning will protect them now and in the future. We're certified public accountants with tax services for the highly successful. For your business and your family, call GrowCo.
Greenstein Rogoff Olson Company will help you manage your financial affairs so you can focus on what's really important in life.
GrowCo, helping you along the way.
Apple pie, baseball, and now here's All-American Alan Olsen.
Welcome back. We're visiting today with Steve Merrell. He's the co-founder of Monterey Private Wealth Management. Steve, looking at your career, what is it that prepared you for where you are today?
That's a question that can lead to a really boring, long story. But I think really what prepared me for this was the time I spent working for an outstanding firm, learning how to manage money. I was really fortunate to spend 12 great years early in my career working with some of the outstanding portfolio managers on the fixed income world, and really learning the techniques of risk control and risk management, and seeing opportunities through that process. It was a great experience.
When you think about money managers, and there's a lot out there,
right?
How do you differentiate yourself from someone coming in and saying, "Yeah, Steve, I'm not sure that you're going to do any better than me throwing a dart at the the Wall Street Journal." I mean, how do you approach risk management, helping an individual to understand that there's a true if you manage risk well, you'll do much better?
That is really the big challenge, because most people out in the world have been trained to be speculators as opposed to investors. And we get trained in that from a very young age. You hear about high schools and they have these stock market games, and it's all about speculation as opposed to, who's going to get the best return in their portfolio or of phantom stocks, as opposed to who's actually controlling the risk and developing a portfolio that's going to meet a particular need. And that's just one example, but our society really focuses on educating speculators. We try to differentiate ourselves by helping people understand at the very outset of our relationship that we see risk differently than other investment advisors. For example, there are 3 prongs to our philosophy on risk. Number 1 is that people should only take the least amount of risk necessary. There are certain risks that the market would have you take, and people feel impelled to take because of a hot stock tip they get at the country club or whatever. And we try to help them understand that those are risks that you don't really need to take necessarily. The second is that you should only take risks that you're paid to take. And there are a lot of risks in the market that you're not paid to take. You're not, for example, concentration risk. If you go out and buy an individual stock, you're not typically paid to take that unless you're intimately involved with that company and managing it. But a typical investor should stay away from tightly concentrated portfolio of individual stocks. And the third thing is to make sure that you're getting paid for the risks that you're actually taking. And so we really focus in on reducing expenses in a portfolio as much as possible. But when we really drive in on those keys to our risk philosophy, people over time they start to get it and they understand. And then when they experience what we do for them. That really helps set us apart. But that's the key: is how do we differentiate?
So, do you ever follow Markowitz? I guess back in the 50s, he put together that balanced portfolio theory. What's your take on that?
I'm a believer in that. What he was saying, he didn't use these words at the time because it hadn't developed to the point. But what he was saying was that portfolio structure is vital to portfolio success. And we get compensated for structure as opposed to stock picking. We get compensated for defining how much risk we want in the portfolio. And Bill Sharp continued with that same and building on that same theory over the years. But what we want to make sure we do is structure a portfolio correctly to take like I said, the least amount of risk necessary, and the amount of risk necessary is what is required to help you achieve your objectives.
So, Steve, if someone wants to come contact you, how do they find you?
Well, we have a great website, MontereyPrivateWealth.com, and they can find out all about our firm, and they can find out our contact information.
Do you have a list of hot stocks for the year?
We don't. We don't do hot stocks. We try to avoid that and educate people away from that.
So again, your website is?
MontereyPrivateWealth.com.
Okay, and a phone number?
831-372-3426.
Okay. Steve, appreciate you joining today's show.
It's a pleasure.
Thank you. We'll be right back after these messages.
You're listening to American Dreams with Alan Olsen on AM 1220 KDOW.